So if you are non-renewed, and obviously that is a major concern in today's marketplace, an insurer has to give you 75 days notice, and that's in California law. So it's important not to put that aside. I know it's a drag to receive that, and very bad news given how difficult it is to find another insurer. But you can't just put it aside and ignore it. You need to get right on it and start shopping for another insurer. It's going to be very challenging in today's market to find another insurer if you have any level of wildfire risk at your home. But you really want to make sure you do a thorough shopping job. You want to not just stop at the one agent who may have represented you for your current policy. If they can't find coverage, with among the insurers they represent, you're going to need to probably shop with multiple agents, and each agent typically only represents 4 or 5, maybe 6 insurers. And there are many insurers that write homeowners insurance in California, dozens actually. So it means contacting multiple agents, finding out the reason, that if you do get rejected, what was the reason for the rejection? Is there anything you can do about it? There's a lot of things you can't do about it based on the landscape where your home is located, but some things are in your control. So you want to make sure you do everything you can. And you really want to make sure you thoroughly shop the insurance marketplace before you settle for a California Fair Plan policy. So next slide, please. So there are, a number of reasons that are common reasons for non-renewal. Wildfire risk is one that you may not be able to do anything about, but sometimes it's the type of roof or the age of the roof. A lot of insurers used to write wood shingle roofs. I don't think any insurer will write new business for a wood shingle roof today, other than the Fair Plan, because they're kind of obliged to. But insurers use age of the home. They're looking more at some of the issues they have with other concerns, such as aging galvanized pipes that sometimes burst, or knob and tube wiring. That's typically a Victorian home issue. Pools are a liability concern, as are trampolines. And some insurers are capping their values of home they're willing to write at lower amounts. But wildfire risk is a main driver, one you may not be able to do a thing about other than search the marketplace to see if you can find an insurer that's willing to write at a higher level of wildfire risk. And also, the only other thing you can do is try to implement every one of those mitigations that you possibly can. So to make your home as appealing to an insurer as possible. So next slide, please. So know your rights. You, as I mentioned, you're entitled to be treated fairly by every insurer. If you meet their eligibility guidelines, they have to write you. If they non-renew you, it has to be for a reason that they state. And if you can correct it, they would need to renew you. You want to communicate with your agent or insurer to see if there's anything that you can do to lower your risk score or lower your premium. And know that the Department of Insurance is available to you to ask questions. See their 800 number, there's a little concealed, but it's an 800-927-4357, or write to them. They have a consumer services branch that handles consumer complaints is their entire job. So use the Department of Insurance, use United Policyholders. but really make sure you get right on it if you get a non-renewal. And even if you end up in the FAIR plan at some point, don't just assume you have to stay there. Keep searching for coverage with markets that you might not have checked previously. And maybe the mitigations you have done since the non-renewal may make you eligible with another insurer. So next slide, please. So know that at the Department of Insurance webpage, there is a page where you can find all kinds of information to help you shop for insurance. This is under the homeowners tab. There is a top 10 tips that I have highlighted on the Department of Insurance website. I actually created that page, but among those top 10 tips are the 800 number of every admitted insurer that writes homeowners insurance in California. So you can call that 800 number and see if they have a local agent or if they write directly. There's an insurance finder tool that can help you search the market. So, don't give up without really doing a thorough search of the homeowners market if you do get a non-renewal or if you do end up in the FAIR plan. So keep searching for an admitted carrier if you can. Next slide, please. Just an example here is that link to the 800 numbers. There are a lot of companies you may have never heard of: American Modern Insurance and Tokyo Marine Insurance. Most everybody's heard of the same 5 insurers that advertise on television again and again. But please be aware there are a lot of smaller insurers that do write coverage. I'll admit that this can be very much a wild goose chase if you have even a moderately high wildfire risk. But really, you want to do all you can to avoid being in the FAIR plan. So if you're willing to go through it, call 800 numbers, find a local agent, or try and get a quote just to make sure there is no other option available to you other than the FAIR plan. Next slide, please. So here, there are very few things you can do to save money on insurance right now. One thing I mentioned previously was to do all those mitigations. And again, that the mandate that all admitted insurers have to give you discounts for those mitigations. So, and then ask your agent or your insurer directly what other discounts they do make available. Pretty much every insurer will give you a discount on your home and your auto if you bundle, we'll say, both of those with the same insurer. Another thing you might strongly consider is raising your deductible. If you've been sitting with a $500 or $1,000 deductible that seemed like a lot of money to you 10 years ago, but now you can afford a little higher loss than that, and also you want to lower your premium. Think what level of deductible would you be willing to absorb if you had a loss? Maybe you're willing to pay $5,000 or $10,000, given that in almost every case, a major loss may never occur. And you get an immediate reward if you raise your deductible by having a lower premium. And you're really unlikely to file a small claim. Small claims are something insurers don't like to see because often small claims kind of give an insurer an insight about some other risk at your home. So you really want to avoid small claims. Keep your insurance for major losses, and that means raise and keep a higher deductible level. Next slide, please. So one thing to know when you're shopping, there are 4 categories of insurance company out there: admitted and licensed. That's the one I keep emphasizing. is really what you want to do. Those are the ones whose rates are regulated by the Department of Insurance. They are backed by the California Insurance Guarantee Association in the remote chance that any one of them becomes insolvent. That's very rare, but it has happened in California. And the most recent one was an admitted insurer. And so all of its losses were paid despite its insolvency. There's no guarantee of that with a non-admitted insurer, sometimes called a surplus insurer or an excess lines insurer. They have no rate controls. They still do have to follow, a lot of the California rules, but rates aren't controlled. They're not backed by a guarantee fund, and your only assurance of their financial strength is to check their financial rating. So if you already have a non-admitted insurer, you really want to make sure they're at least a B+ on a best rating, or an A is much better. You don't want to get anything less than that, because you want the security that your insurer will be there to pay a claim if you do have a major loss. There's also the FAIR Plan. Many of you may already be familiar with that option. It's a tough one. We are fortunate to have a FAIR Plan in California. It is financially secure in that if it does run out of surplus funds, it can do an assessment on the admitted insurance industry to make sure all of its losses are paid. So that is a major benefit of at least being with the FAIR Plan, is financial security. If you do get a FAIR Plan policy, which is essentially just a fire policy, you're going to still want to add what's called a difference in conditions policy or a wraparound policy. That's the same thing, to provide water damage coverage and liability coverage. Water damage coverage is like the second most common cause of loss in homes. So you really don't want to go without that. Pipes do burst and do major damage at times. And liability coverage, also very important. It's not that common of a loss, but it can be a significant loss. If somebody, for example, injures themselves on your property, you'll want to have liability coverage from an insurance company. Forced placed or lender placed coverage is a coverage that your lender will purchase to cover its own assets, the amount of loan that it has provided for your property. It covers only the lender, really, does you no good, but you will have to pay for that coverage if you don't put another coverage in place if you get non-renewed by your insurer. So you need to maintain your own coverage, or your lender will place a coverage that benefits only themselves